A series of PMIs and corporate reports were catalysts for market moves on Wall Street yesterday. Upbeat corporate reports enabled the S&P 500 to extend its winning streak. On the other hand, the Dow Jones pulled back. Will the S&P 500 be able to close with the gains for 5 days straight? Let's try to figure it out. You're watching a daily review of American markets with me, Ekaterina Stikhina. The benchmark stock indexes closed mixed yesterday. The Dow Jones came under selling pressure, whereas high-tech stocks lifted the Nasdaq and the S&P 500. Both indexes pulled back from intraday highs, and the S&P 500 inched up by 0.08% to close at 4,868. Futures on the major stock indexes added 0.2 and 0.5% in the New York pre-market. The S&P seems to have topped out. It needs more economic data and positive corporate reports to maintain bullish momentum. The index is expected to trade in the intraday CAD between 4,854 and 4,905 points. High-tech stocks and artificial intelligence drove growth of the S&P 500. As for the economic calendar, the S&P Global Survey showed that business activity in the United States improved in January. Inflation has been loosening its grip. Analysts suggest that the U.S. economy is on a sound footing in early 2024. The resilient U.S. economy and an uncertain timeline for the Fed's monetary easing made investors revise their bets on interest rates this year. The likelihood of the first rate cut in March is waning, but the market believes in the policy reversal in May. Gloomy market sentiment was cheered up by fresh economic data from the United States, which again proved the strength of the economy. The focus was on a gross domestic product, the PCE price index, and durable goods orders. According to flash estimates, the U.S. economy expanded at an annual rate of 3.3% in the final quarter of 2023, much better than the market forecast for a 2% increase. The GDP growth was 4.9% in the third quarter. The data reflected increases in consumer spending, exports, government spending, inventory investment, and residential fixed investment. Imports also went up. Taking into account all of 2023, the U.S. economy grew by 2.5% compared with the 1.9% in 2022 and Fed estimates of 2.6%. The Fed's tightening campaign affected the economy, but the losses were less severe than initially expected as the tight labor market continues to bolster consumer spending. Durable goods orders remained flat in December on a month after a 5.5% increase in November and missing expectations for a 1.1% rise. As for initial unemployment claims in the United States, the figure was finally beyond the consensus and exceeded the forecast of 200,000. The number of applications grew by 25,000 from a week ago. Meanwhile, the currency market is anticipating Christine Lagarde's press conference with bated breath. Popular currency pairs traded sluggishly in the New York pre-market, and high volatility is expected later today. The US dollar index traded at 103.20 before the opening bell, and the instrument is likely to trade in the intraday CAD between 102.70 and 103.70. The ECB maintained its key interest rate at a record high of 4.5% today. The downtrend in core inflation continues and previous rate hikes continue to weigh heavily on financing conditions, ECB policymakers said in a statement. The ECB reiterated that interest rates will remain at the current levels for some time, and now attention will turn to Christine Lagarde's press conference. Markets reckon that the ECB will cut rates sooner than later. Fresh data from the US today suggests that the Federal Reserve has both the leverage and reasons to hold rates at the current levels for longer. In any case, we will find out the ECB's rhetoric later today, and the Federal Reserve will announce its policy decision next week. The Canadian dollar weakened against its American rival after the policy meeting of the Bank of Canada. However, the loonie managed to rebound before the opening bell, and the USD CAD pair opened the New York session at 1.3490 or 0.23% down. The intraday Canada for the instrument is seen between 1.3470 and 1.3530. The Bank of Canada kept its overnight target rate at 5% on Wednesday, and the regulator said that even though core inflation remains a concern, the bank is shifting focus to the question about the timing of keeping rates at the current levels. In the opening remarks to reporters, Bank of Canada Governor Tiff Macklem said that the bank is not ruling out further rate hikes, but is concerned about stubborn high inflation. On the economic front, the Bank of Canada projects weak GDP growth in the first quarter that is gradually accelerating. Inflation is expected to remain around 3% in the first half of 2024 and decline to 2.5% in the second half. Eventually, the annual CPI will return to the target sometime in 2025. Meanwhile, the crypto market continues to drift after a rally in early January based on an ETF approval. Bitcoin is still correcting and hovering below $40,000. In the pre-market today, the number one crypto was trading at 39,989 or 0.3% higher. Our analysts suggest the following intraday outlook for Bitcoin. The baseline Canada is seen between $39,500 and $40,200. If the token settles above 40,000, we can expect the price to recover to $41,200 and $42,300. Otherwise, the asset may drop to $38,600 and $37,600. Our review of American markets is over. Subscribe to InstaForex TV channel, and we will keep you updated on daily market developments. Financial markets offer ample trading opportunities. Good luck in your trading and see you online tomorrow.